And welcome. This is Mary Ellen McGonagle with your Friday afternoon MEM Edge show, the show where we bring you where the action is in the broader markets. We certainly had a bumpy ride last week, ending the week on a negative note. So we are going to get into all of that relative to the rotation that's taking place, some of the fear that's beginning to bubble up, and newer areas outside of the US that are starting to or have been performing quite well. So let's go ahead and start with some of that news that drove price action last week. And certainly front and center was Trump's announcement that in March he is planning for 25% tariffs on the imports of automobiles, pharmaceuticals, and semiconductor imports. Also, there was news out about the Federal Reserve. Fed Chair Powell was speaking, and he cited the tariffs as resuming or having their inflation fears rise. So in turn, we did see interest rates pop a little. We'll take a look at where they closed for the week. However, we got a little bit of a late week dip in interest rates. And then also consumer sentiment came out today and it fell 10%. And that is really what drove a lot of the selling today. Durable goods orders were down 20%. There's that fear that the economy is not as strong as initially anticipated. Next week, we will get more information relative to that. The second revision of Q4 GDP will be released, so that will certainly provide a bit more insight. We also get very key inflation data, and that is PCE. This is the Fed's preferred gauge for inflation, and that is due next week as well. And then also last week, Walmart, huge retailer, came out with their earnings. They did come in ahead of estimates, but management guided growth estimates lower going forward. So that was another reason that we did see particularly retailers sell off. We're going to take a close look at that as well. So let's go ahead, take a look at the broader markets and see where did we close for the week. And here we are, a daily price chart of the S&P 500. And as you can see, we had quite a dip today, down 1.7%. The index did find support here right at its 50-day simple moving average. We do now have an RSI in negative territory. However, we also have a negative crossover on that MACD. That's that black line down through the red. And you need only go back not too long ago to see what preceded that type of a move in that MACD when coupled with a negative RSI. So a little shaky here on the broader markets at the current period. Also keep in mind taking a look at this drop that took place in mid-December. And this was a period when the Federal Reserve announced their shift as far as rate policies for 2025. It was at this time that they stated they will have fewer rate cuts than anticipated. Again, very much inflation still remaining sticky, and then also tariff fears going into the new administration. So we're seeing a similar drop at this point in time. You want to have a period of precedent as your guide for what to potentially be on the lookout for. But at this point in time, we are in cautious mode with the S&P 500. Let's move ahead and take a look at the NASDAQ. And the NASDAQ did get hit harder today. It was down 2.2%, and for the week down 2.5%. We were sitting up here really quite nicely until today's selling activity. The NASDAQ did close below its key 50-day simple moving average, and now we have a negative RSI, and then that MACD negative crossover shaping up. From here, we're going to take a look at those 11 sectors underlying the S&P 500. And for those of you familiar, you'll know this is a 2-month daily price chart view, and it's sorted by, let's go ahead and do that, by RSI. That is that relative strength indicator in descending order. So what we want to do with this view is have a very good sense of where that relative outperformance is taking place in the broader markets. We have the S&P sitting down in this lower quartile here, while these areas at the forefront in front of the S&P are performing a little bit better. But let's take a look at these 4 areas up at the forefront. We have consumer staples, XLP, XLU is utilities, XLRE REITs, and healthcare. And they are most certainly defensive areas of the market that are sitting up here at the forefront. We did see a little bit of this movement going into this week, certainly among these staples. There were not a lot of names at the close last Friday that were doing very well, but that has shifted as we see more money flowing into this consumer staples area. I will share with you more information relative to these industry groups sitting up here at the forefront. Of note with healthcare, however, is we are seeing a little bit of wobbliness. We do have RFK Jr.'s. He is now at the helm for the health department, and that does have investors worried. So it's not quite as bullish as some of these other areas. But we did see a nice rally in several large pharmaceutical stocks last week, and that is certainly good for XLV grouping. Now let's go ahead and want you to certainly equally be aware of those areas that are going to be more sensitive to, in particular, a potential economic slowdown. And that's going to be those sectors. We'll get into those industry groups that are economically sensitive in a negative way. First up is industrials, and you can see that it did drop more than the broader markets today, and this is a highly economically sensitive sector. Also, we did see consumer discretionary, and this is where certainly that Walmart earnings report was the initial shot across the bow, but we're also seeing weakness throughout some of these retailers. As you may recall, about 3 weeks ago, perhaps 4, we began talking about the negative price action taking place in some of those retail sneaker and other apparel related names. This is Decker's huge drop. They came in above estimates, but again, guided growth lower. A lot of these companies are talking about tariffs, these retailers, in their quarterly earnings calls. And you can see now, this is just one example of many names that in this retail space. Of course, Decker's makes UGG boots as well as Hoka sneakers. So, but they have huge growth prospects, but not enough for the markets. So selling off taking place there. And you can see that we are in a confirmed downtrend with XLY, that consumer discretionary area. We'll drill down a little bit further as we move through today. But those are the two. And then also financials. They tend to be very sensitive to economic potential slowing. We're not quite there yet, but certainly the fear is there. So let's go ahead and move forward, take a look beneath the surface beyond these sectors at some of these industry groups. And I use ETFs that are really helpful in getting your arms around strength relative to weakness and what is picking up by way of interest and not. So here we are again with the 2-month daily price chart view with that RSI. And up here, front and center, is that volatility index. So we did close, this is the VIX, also known as the fear index. So we did get up to 18 here on that volatility index. Let's take a look at that last move down in the markets upon the Federal Reserve's lowering the number of their interest rate cuts. And you'll see at that time, we did get up to as high as 27. So we're not quite in the stratosphere, but we certainly are trending upward with this volatility index. Again, lots of uncertainty out there, certainly regarding political and economic policy. So we are seeing volatility move up here to the forefront. Also, IHI remains up here. Now, this is the medical products space, and it is certainly a key component of the healthcare sector. You can see that we are bouncing around here. It was flat for the week, but holding up really quite well relative to other areas. Surprisingly, biotechs are doing well also. They ended the week up, and we can see that the group is still in a downtrend, but it's interesting because it is usually viewed as a risk-on industry group, but it is finding favorable price action. Now, as we move through, I talked about economically sensitive. Semiconductors would be a key group. They are used in just about every industry, their chips and other products, and you can see that they suffered today quite a bit. on that economic fear. And then also, as we move through, take a look at some of these other areas that had already been weak. I've been talking about XRT with my MEM Edge twice weekly report, and talking in particular about the relative weakness that had been enveloping this group before an even further drop. Today, XRT is the S&P Retail ETF, and certainly because a slowing economy will reduce retail spending, it also has everything to do with these companies, Walmart certainly front and center, that are coming in and announcing growth prospects that are a little bit lower than anticipated. Small caps are another area, very economically sensitive, and you can see the big drop that we saw today. A lot of that having to do with a drop in banks. KRE is the regional banking ETF. It was down 2.6% today. Small cap index has about a 17% of its index in these bank names. Now, another area that I wanted to highlight, I talked about this today. We did see interest rates dip. They're down at 4.4%. This is the yield on that 10-year treasury. And this is something that when the economy is perceived to be slowing, it is good as far as for the concept that the Federal Reserve may lower rates as opposed to a strong economic backdrop. So we have the 10-year yield falling a bit there. Of note, IGV, this is the software ETF, and it has suffered this week. I talked about it in my MEM Edge report. I'm going to dig in quite a bit more over the weekend, quite simply because this is an area of the markets when it's faring well, you can really far outpace the broader markets, but at the same time, you don't want to get in the way of potential further deterioration. So from here, what I did want to share with you is that shift that is taking place in the broader markets. And I'm going to go ahead back to this initial page interface on stockcharts.com and share with you an exercise that is really super simple, but really helpful, particularly in this environment during this past week. So what I'm sharing with you is called the Scooter, or the Stockcharts Technical Rating Reports. Now, this is a report where you can sort, in this instance, by market cap, large, mid, small, and so on. And the higher the Scooter rating, the higher the technical rating, and quite frankly, the higher the momentum in that underlying stock. So looking at large cap, the highest ranked Scooter, you can see 99.9 up here. I'm sure you'll be very familiar with many of these names up here at the forefront with that Stockcharts technical rating. From here, we're going to look at a candle glance view of those stocks. And this really exemplifies that move away from high momentum stocks. AppLoving, a big winner here. You can see that it has fallen. We're on the lookout for a potential negative crossover on that MACD to confirm that downtrend. Palantir, a big winner, certainly one of the major names on my MEM Edge suggested holdings list. It is finding support at that 21-day simple moving average. However, we did get that MACD crossover. So those that are investors, you'll want to hear more about that as I put out my weekend report on Sunday. And then also up here at the forefront, Reddit. These again are names that had very, very high momentum going into the second half of this year. And this particular name is now down below that 50-day simple moving average, negative RSI, MACD heading negative territory as well. Now, one last name I want to share with you is Hood, Robinhood, and you can see that it has very decisively broken below that 21-day simple moving average, negative RSI. Pretty heavy volume here, but we now have a negative crossover. And for those that watch the show regularly, you may remember that Reddit and Robinhood, as well as Rocket Lab, were major holdings of those ARK funds. So if you did invest in them, you will certainly want to take note that the heavier holdings, Palantir among them, have begun to get hit with this move away from these higher, faster moving stocks that are beginning to come under some distribution. Now, of note, we can look at a name such as Tapestry. This is TPR. The stock was years ago Coach. They do a lot with accessories and other apparel, and they are very big in China. So this is a great segue because TPR, you can see while in the US, those retail names, a lot of them have just fallen out of bed, but TPR is back up above this 10-day simple moving average. I believe it closed just at that, but certainly we're not seeing that heavy distribution. So from here, I did want to share with you that the Chinese market is and has been in a pretty nice uptrend. So here we are with iShares MSCI. Actually, MCHI is the ticker symbol. And you can see since the beginning of this year, we have seen a very sharp advance. Now, I would argue that at this point in time, certainly the price activity over the last week is going to be more speculative money making it into these Chinese areas. However, in doing my research, a number of major Wall Street firms, HSBC, Morgan Stanley among them, are touting the Chinese market and as a way to potentially diversify. We are in an overbought position, however, with MCHI, but the MACD does still have more room to run. So from here, what I did want to do is share with you a couple of the reasons why back here in this period, and certainly into November, there were some stimulus packages that were being talked about in China. And then there also economists are on the lookout for an eventual economic recovery in China that's also driving these stocks higher. And then last up is the fact that these companies that are in China, those segments that are sheltered from the tariffs are anticipated to continue to fare well. So let's take a look at a couple of names in the Chinese market for those of you that may have an appetite. First up here is BILI, BILI is the ticker symbol. A couple of things making this attractive. And first up is that higher volume on your rally days. We do have that MACD just getting into positive territory and that RSI heading upward. The company is an internet entertainment company, and they also have super high growth prospects for both this year and next. Let's take a look at another company that is well known, XPEV. And we can see here that this stock already had that base breakout on that gap up, pulled back, and is back in an uptrend. This is an electric vehicle manufacturer and distributor, and they are faring really quite well. TME, this is another entertainment related company, but it is music related. Now, they did have this 12% move today, and while it did push the stock out of this base, I would certainly not chase it, look for a pullback, but it's certainly an example of this move that we are seeing into Chinese names. Last up is MOMO, MOMO, and it's Hello Group. They are a social networking company that is poised to break out of a 6-month base, and very interesting looking there. So as we take a look at these broader markets, I mentioned to you that we are seeing those higher momentum stocks. Let's take a look and some ETFs that are also going to exemplify what is taking place beneath the surface in the markets. And this is VFMO. It is the Vanguard US Momentum Factor ETF. It has an array of different market caps, but in essence, it's going to be an AI-focused high momentum ETF. And you can see that we did drop 3.3% today. Again, taking a look at the last time that we saw a significant pullback in this particular ETF, and note that we were able to recover, not without a little bit of pain, but it's something I would put onto your watch list. And then from here, we can take a look at VUG. This is the Vanguard Growth Fund. And you can see that we had a big drop today. A lot of these are going to be those M7 names. So this is in line with the fall in that NASDAQ. And from here, what we can do is segue right in and take a look at those M7 stocks and see just how they fared, which areas are pulling back more than the broader market, you want to be aware of that strength relative to weakness among these mega cap names because their price action will drive price action elsewhere depending on what is shaping up. So first up, we can see Amazon, certainly one of the largest retailer, and you can see that the stock was down almost 3% today. This is after it closed below its 50-day simple moving average. We have that negative RSI, and now the MACD down here in negative territory. So really it is mirroring what we are seeing in that sector as well as the sub-industry grouping areas. And then also I talked about high momentum. Meta is on our suggested holdings list, and the stock had 20 trading days of upward price action, and that's really unheard of. Certainly it was up here. I talked about this in my report last week that momentum RSI was sitting up here really at an overbought position, and we are in fact seeing a pullback with this black line down through the red. It is still a favorite, but it is a favored name among AI related names, and that those are the areas getting hit. We can also take a look at Microsoft. This is a company that had dropped due to reduced sales in their cloud computing. That also hurt Amazon as well. And you can see the stock has not been able to recover. Let's take a look at some of these names up here at the forefront, and we'll see that Apple is continuing to retain its uptrend. And when you see this type of price movement on its own, it is bullish. It's called a high tight flag formation. But even more impressive is how Apple is holding up relative to pretty serious selling pressures elsewhere, certainly in growth. We have a nice double bottom formation, and you can see we have these nice bullish MACD and RSI. So that's sitting up there, definitely one for the front of the watch list. And then Netflix also holding in relatively well. We're not looking particularly great because we are now below that 21. And then we also have that MACD crossover, but it is certainly worth noting as far as areas of the market and certainly within this mega cap space that are relatively outperforming. And one last area that we can get a even better feeling as far as what is shaping up beneath the markets. I have a screen that I run depending on where we are in the markets as far as its relevancy, but it takes the entire markets and it sorts the stocks by their year-to-date performance, and it has to have a relative big outperformance to make it into this list. And from there, I did look today at names on that list that fell on above average volume. So if any of you are owners of names such as HIMS, now this was news driven. The company does sell a weight loss product, and the FDA announced today that the weight loss product shortage is behind these bigger pharmaceuticals. They can begin and resume selling, and companies such as Hims and Hers, which have been selling a knockoff drug, their sales will be reduced. But you can see that high momentum. The stock was down about 25% today. Another high momentum stock that is under selling pressure is GRAL. GRAL, GRAL, and you can see the stock had a very sharp advance up to this high in price at 62.5, and it closed at 40.7. And you can see how, again, this super high liftoff and momentum is shifting. We can also look at Duolingo, a fan favorite, and this too is a big, when you see that widening in that MACD, that's just indicating a very strong push to the upside. We're just poised to potentially experience a lower RSI that would put it into negative territory. And then last up is BROS, and this is a restaurant stock, Dutch Brothers, big momentum player. Earnings gap up, uptrend, earnings gap up, and then a pullback. Now it is sitting here at that 10-day simple moving average. Maybe keep it on your radar. But again, we had that big momentum shift. Depending on where we head next week, you can see that we're in a period of high uncertainty. And as earnings seasons begins to really trail off, we have about 4% of the companies have already reported their results, so these headline news are going to take on greater impact. That's it for this week, everyone. If you like what you've seen, go ahead and hit that like button and be sure and use that trial button below. You can trial my twice weekly MEM Edge report for a very nominal fee. Have a great weekend. I'll see you next Friday.